What's up, guys? Welcome back to the channel today. Hope everybody's having a fantastic weekend. I want to go ahead and cover some hot stocks that we as a group were playing pretty strongly last week, and of course, it's the EV sector, guys. I know you all know it's probably on fire, but there's a lot of overlooked little tickers that really resemble this sector, and it's pretty phenomenal to see these companies coming out of the woodwork for electric vehicles, batteries, things of that nature that really, affect that industry directly. But some of the big factors of this is that people don't realize is there's a lot of potential for this sector. I mean, depending on politics wise, which I'm not going to touch on today, but that's the wave of the future of what people are looking at. Hell, even Bitcoin's getting some action, and some people think of that as a futuristic method, which there's the possibilities as well. But something I want to touch on today is literally these hot EV plays that are really, I mean, just piggy banks. I mean, you grab the sections right, you play them properly, and things of that nature, and it's pretty phenomenal. But NIO's kind of been the captain of the ship for the most part that everybody's really taken notice of and played directly. And it's been astonishing to see the moves that this play has made. I mean, hell, all the way back in was this back in May, we were looking at a $2 and $3 stock. Hell, you can go back as far as April. And yeah, $2. I mean, you can't. Yeah, October of last year, we were dealing with like a dollar and some change there, but a huge run. I mean, just think of that. You could have got a dollar, and we're looking at a year from what it was at a dollar, and you've more than multiplied your money pretty substantially to be up here near $50 and even some change on $50, which we've hit 54.20s up here. But a crazy run, and I don't see this run being over anytime soon, guys. So you got to take advantage of the dips, got to take advantage of the charts that are literally patterning up here in a very astonishing way. The sector's on fire. People are throwing their money into stuff like this, and it's amazing to see the kind of moves that stocks like NIO that are completely some serious bread and butter every day. In the past we were playing a lot of tech sectors and things of that nature, but I'm focusing on this stuff. I mean, it's literally the options pay really well. There's a ton of money to be made in this stuff, and it's just without fail to take advantage of. So with that being said, NIO looks really strong for this next week as well, guys. We've bounced off near here at what was that, 42s. Was all low 42s. I thought we might see lower, but we didn't. We kind of held that pretty substantially. Buyers came in. Looks like we did pretty good. Thursday really pushed up strong. Friday got a little bit even stronger. Saw some highs up here around 49.38. Looking good for tomorrow. Obviously, it did pull back some with the little bit of the market dump into close for that matter, but we should be pretty healthy. I think if we get above that 49.38 and see 50, 51, and then possibly some new highs as we keep pushing up. But candles look good. We want to build above that as support and easily pop in a candle up there and probably stair step our way up to maybe even break the new highs by Tuesday. It could be Monday. I don't know. The stock has really put in some good moves on some candles, so it could be very surprising as we step our way up there. If we do meet that area of 54.20, you can expect to pop a candle in there, maybe shoot it up to that degree, and then maybe even consolidate a few times before actually finally breaking out of it. So with that being said, we'll see what this week brings, but I'd expect this to probably pop that this week as long as the sector stays on fire. But strong watch for this week. And of course, I got on my watch list over here on the right side that you guys can see that all relate or pertain to this sector. And it's insane the amount of moves that some of these are doing. Even stocks like GM. This thing's been flying off the handle as well. I mean, not to the extreme, like directly, like some of these others have, but hell, the options are really cheap on this stock. I mean, they make good moves. They're strong. But it's making some all-time highs up here too. So I'm constantly watching this sector. They had earnings right here on November 5th, and it's been pretty much up ever since. Even Ford. I mean, I don't play Ford, but it's up here on the watch list. Options are super cheap. It's a very, very slow stock, guys. That float and share structure is massive, so it takes a ton of money to make this thing move. But it's still getting some action with the EV sectors as well, which is interesting. These companies are coming in, they're trying to make vehicles to match the market. Whatever the people, the consumer, the customers, all that want, they're going to have to come up with innovation that is going to excite new investors and traders and buyers and things of that nature to want to, have interest in what they're trying to provide. Stocks like Planner, big astonishing move on this one as well. It's not directly on this EV sector per se, but it does ride along with it. It has been pretty potential as this thing has been pushing up very nicely. Pick is one that's getting a little bit of excitement too in the groups as well, and it's been doing some pretty decent moves lately. Ride is another one. It's popped out of this area and got some strong interest. Highland has been another one. I think this is in the electric semi situation there, and it's getting some little bit of interest, so I keep a watch on it. We've got Fisker here that's obviously done really well. A lot of people have pretty much over traded or over ambitioned this thing, I guess, to some degree. We've had pump groups on this play that try to pump the stock every little situation that they can, which there's money to be made. I mean, we got a double top right here, so don't expect this thing to want to just keep going, but there is a lot of new traders that have played the stock due to the big pump groups that really play in this thing. But there's money to be made on this. I mean, we had some crazy droppage right there that has dropped this thing pretty substantially, but we've recovered pretty nicely. Obviously, that first area would be that 1827 to see if we actually go to new highs. But for the most part, it wouldn't be surprising to see this thing kick back down to the mid 14s, maybe in 15s here. See what kind of retrace we get as we get above another support zone, maybe something to that nature there. But it's well on its way for obviously in the next couple of years. Fisker's got stuff that's coming out that is very exciting for that EV sector. Nikola, not so much here. Obviously, a lot of drama that has played with this stock, but still in the same sector. GM is kind of in control of this, I believe. But it has not gotten the waves, obviously. And this, of course, had all started with pumps as well in the beginning. Due to the excitement Trevor was trying to bring to the table. Obviously, he's out of that situation there, and of course, it's it's fallen, it's hurt, it's done its trash, so to speak. But who doesn't like playing a little bit of trash, right? But with that being said, we'll see what has in store for Nikola. Apparently, it was vehicles that were not even running. Pretty much falling down a hill to make it look like, they're doing something. But, we'll see what comes with that. I still won't throw that thing out. But if it gets action, markets come to it, that's all what I'm here, guys. I could give a crap about the company. As long as the chart looks good, there's people flocking to the market. They want to play it. They want to make money. Then that's exactly where I'm going to be. XPEV, very astonishing move here as well. This thing has been on fire, and this thing moves fast. I mean, look at this. We're at $20 November 3rd. I mean, hell, that's the beginning of this month, just a couple days ago. Excuse me. So to be doubled over that in just a matter of a short time, there's a lot of people not even noticing this stock. But with that being said, it's been real. I mean, it's just constantly broke up every time, and we're back above $50 here. So to be honest, we'll see what this thing push out. It may pull down again and then push right back up. As it climbs its way with a stair step, one section at a time. I mean, it's bounding up. So it may ride a nice, decent trend up there. We'll see with that. They built a pretty nice car. I mean, I think this is another China related car, kind of like NIO. But with that being said, do not ignore this stock, guys. Options pay really well on this play. It's a really strong play, and obviously there's not a lot of data as we started back here in August on this market share. But another one that's just really getting a lot of attention that I noticed on the boards. So pay attention to this one. Strong play in the coming weeks as well. Plug Power. This is another one that falls in line with BLNK. Okay, these EV sectors, these stocks, these car companies got to have a way of charging. Okay, obviously, just like your vehicle, your gasoline vehicle out there has to go to the gas station to fuel up. There's got to be ways of charging these vehicles as well. Plug Power is a part of that situation right there, just like BLNK, which I'm going to touch on here next. Plug Power did put out a $750 million offering of some sorts, and plummeted the stock for a brief moment, only to recover pretty nicely. So not in a very massive situation at all. Didn't seem to soak it up. Buyers are not scared of this stuff when they're really looking at a long-term vision of what this can actually be. So to say Plug Power to be a $30 plus stock would not be an understatement. I'm pretty certain that we'll definitely see well over 30, 40s, maybe even 50s here this next year. But a strong stock that's definitely come back down here from $4 back in June. We got down on here low as $2 and some change back in May. You can go back as far as September of last year, and we were, $2, $1.90 and some change there. So with that being said, very astonishing move as well. This sector is going to keep rolling and it's strong. But obviously play with proper risk management, understand the trade, understand your visions on this situation. But another great stock as well. Blink is just broken out in extremes. Okay. Blink Power is another charging company as well, just like Plug Power we just talked about. But this is probably more or less the more popular one that I see, at least in my area. You see these little charging stations at hotels and, different shopping centers and things of that nature. And Blink is a pretty popular one. You see the Teslas pulled up to them. They're always charging their vehicles up to this platform. But yeah, I mean, this thing is blown out of the water from $9, and we're looking at 22 in a matter of just last week. That last week was super, super strong for Blink. A lot of money was made on this move. To see how much higher we go, I don't know. It's got to have some kind of consolidation or a brief pullback of some sorts before it can keep building this momentum. So just be aware of that. Obviously, don't play the tippy top and expect to make even greater moves. But yeah, strong watch this week. I kind of want to see how we pull back, how we consolidate, how we look like. But long-term vision on this, obviously, another $30, $40, $50 plus stock to easily come in the near future with this one too. KNDI, this is a very teeny tiny little smart car looking thing, but it is a battery operated vehicle. Getting some kind of action here as well. Similar situation. That whole entire sector kind of works on like a pretty substantial group. LI is another one. Very nice pushes that are going on with this, so don't ignore this play. We were back down here in September at $14. We're at 38. I mean, these things have well over 100% their market share. So, I mean, there's money to be made. FUV, very, very strong move on this one. One of our group members in our chat mentioned this one earlier on last week, or the week before last, actually. And this thing was $5-6 a share, and we're knocking on 17. I think we hit what was it, 20 something up here? Yeah, 20 and some change. So crazy move. I mean, hell, you 200, 300, 400% your money. Obviously, if you're playing options in this situation, they were grabbing well over 1,000% on their options contract. So really crazy move. A lot of money to be made in this. Obviously, new charting will have to take place on this on probably different time frames, as these candles are just mind-boggling. But money to be made on this sector, guys. It is on fire this year. Tesla's obviously been the more lacative one during this situation. It's kind of been waiting on the S&P 500 inclusion, which is going to be on December 21st, from what I gather. That's coming up pretty soon. They actually had the reverse, or the stock split that they had. And of course, it's kind of altered the way that the stock trades. You got to realize it's 5 times fatter. It takes, 5 times more money to make the same amount of move that it used to make. So with that being the situation, it's still a beautiful chart. It's still doing its thing. It's got a gap here now, but it does not have to fill. But with that being said, we'll see how we consolidate, how we push up. It is more lacative. But it will still probably get good potential. But to be honest, we're at here at 500. It's fighting with it. It just can't seem to want to close above it. It's got really close, but has not closed above it. So that being said, we'll see if we close above it next week. If we do, we'll probably see 520s, 530s pretty easily. So watch for that 500 close, okay? Meaning that we market stops with this price being just over 500, sets up for a good continuation as we can, play this one continually. Workhorse, another one that doesn't get quite as much attention as will, but still a very strong sector in the same EV thing. And this thing is pushing up. Very strong move on Friday. Wants to kind of push on up here and see probably some new highs. This week won't surprise me to see if we crack that $30 again. So watch this one closely this week. We could do it. It could be the following week after that. It just depends how much time it feels like it needs. But if it puts in candles like it did Friday, it'll reach that area pretty quickly. But options pay really well on this one. Solo is another one that's completely not getting noticed a ton. But this play has been, I mean, it's It's crazy how fast this thing has moved as well. I mean, look at these candles; are just out of this world going with that sector. I mean, $3 and some change back down here on November 13th, 11th, 12th. Crazy to see these kind of moves. And we're knocking on $10 and some change. Hell, we hit 13, looks like 13 and some change up here on Friday. Big move on Friday. So don't ignore this play either. You know, obviously, as we're near these highs, just be cautious of it, because we've got to have some kind of pullback or consolidation of some sorts before the next legs can begin to build. Okay. The buying power will eventually fade. Shorts come in, sellers come in, profit takers come in, and of course bring the price down to a certain degree. Going to look for how those levels handle here soon. So watch this stuff. Very strong plays, guys, and that's kind of what I want to share with you guys on the stocks this week. Obviously, I'll post some earnings reports, plays, and things of that nature on my Twitter here soon. But I want to go ahead and provide a lesson for you guys today. A lot of the members love to see the lessons and stuff that I got to share, but today I want to talk about this risk versus reward. Okay. So many people come to the market, don't understand what they're doing. They're buying candles, they're buying alerts, they're buying this or that, whatever, you know, some chat room play is doing it. You got to realize that, guys, these free chat rooms are designed to not necessarily help a trader, but to literally just, you know, provide alerts, provide extra money to the plays that they are playing. Okay. You're like a helper to make the stock move in their favor. Okay. And of course, if you play it properly, there's money to be made for everybody. Okay. So it's not a bad thing necessarily, but it is a situation you guys got to understand. You know, it's not all about just, you know, you helping yourself make money. You got to understand the elements of why the stock falls back, why there's dips, why there's pullbacks, why there's a reason for that risk versus reward. How high are you buying this particular stock? Are you chasing it? Are you understanding a trade plan that you have implemented around it? If you don't have any of that stuff, guys, you're just a guy that's gambling the markets, throwing money at this, throwing money at that, without understanding the risk that you probably are taking. So, guys, I talk about this stuff in my classes all the time about this risk. Understand the reasoning behind your play. Understand the reasoning before your entry. Understand the plan that you've structured for your play. Everybody has different play styles. I mean, some of us are day traders, scalpers, swing traders, things of that nature. But we have to understand why we're jumping into this play, why we're exiting here. Why do we think it's going to pull back? Why do we think it's going to push higher? You know, understanding the elements of that chart and the reasoning behind the situated play. And you got to have a plan. Okay. All of us have rules. Well, most of us should have rules. If you don't have rules, it's something you guys got to write down, which I've talked about in my last class or free YouTube video that I posted up last week. Got to have those rules, guys. It's there to help ourselves. We got to know when to stop out of plays. We got to know when to take advantage of a situation and not so much. But building those habits, building something that really just structures ourselves to be more consistent traders. But risk versus reward, okay? It's not all about just winning. We have to analyze that chart and be like, okay, how much reward is the potential that I have for this risk that I'm going to throw on the line in order to play with this particular security? You know, options are great. They're contracts. They're not actual stock, but they're contracts representing the stock. So I use them as a vehicle based to my chart. And the rewards on that are astonishing. Okay. It's obviously a lot less risk versus reward. Due to the amount that you're risking a lot less money to make far substantial reward versus just playing common shares. But it does lack a huge amount of risk due to the fact that so many people want to play large, just as large in an options contract as they would common. So you got to be cautious of that, understand it. And of course, that's an entire new lesson on another day as far as understanding those options contracts and how they play. But something you got to constantly look at as far as your emotions and management of this particular situation, guys. Okay. Amateur traders are constantly looking for that huge trade. Okay. How many times have we been there? We come to the markets, we hear about all this money being made. We see, you know, John over here. We see Tom over here. We see these guys just pulling in all kinds of freaking money, and their P&L just looks amazing. They've got, you know, hundreds of percentage, and they're making 20, 50 grand, 30 grand here, 10 grand here. And it's all just, all you see is big green numbers and everything. And you want to be a part of that situation too. But you got to realize, guys, P&L, your portfolio value is not something you need to consider as your self-worth. Okay. If you're not pulling in numbers like that, you're probably not playing the same type of trades. You're probably not playing the same type of the amount of money they could be putting into that situation to make that kind of money. Smaller money is going to make, smaller money, but you got to be able to be consistent with it. It's a building block to further and further success. But don't be constantly looking for those huge trades. Okay. We got to understand the huge trades come and go. They are there. But you stumble upon them. They're not always going to be there. Okay. They're like a surprise almost. They sneak up on you. You're like, man, this looks like a good trade. I'll take it. And it ends up turning out to be a huge trade. But there is no way of, predicting that beforehand in some ways. So with that being said, we're speculators. Okay. As stock traders, we're always speculating what this or this or this or this might do. Okay. And if you're trying to speculate, trying to find the bottom or the top of a stock, or the biggest, most potential, whatever award-winning play that you want to look for, you could be missing out on a lot of good other potential that you're just completely overlooking. But you're looking for that home run trade that will take them to retirement. Like, don't ever rely on one stock. Okay. Never rely on one stock or one trade to ever take you home, or in that situation, retirement, an address changer, rocket emojis, this or that, pump status. Stock trading and consistent investing, guys, it takes a lot of, trade over trade over trade. I've traded a ton, guys, and it's literally just one trade over another to build consistently. And by the time you're still waiting in your one stock, holding it for, months, weeks, years, sometimes it's a bag, guys, and you're just waiting on it to make money while someone else over here is literally just scalping trade after trade after trade, building, compounding that money and interest upon each trade in the previous. So very important, guys. Don't just push yourself to looking for that one, home run play, and you literally miss out on so much opportunity out there. Unfortunately, there's practically no such thing. Okay. There is no such thing, obviously, as that per se. It does happen from time to time as far as big plays, big runs. But sometimes it's by luck. Sometimes it's by, accident. Sometimes it's by someone with terrible risk management or terrible judgment of something, and they got lucky. But the stories I hear of these plays, the person never sold. Okay. That's something that some of these, pump rooms and things of that nature want you to hang on. They want you to help hold the play up. They want you to help put your money in it to help substance the run. But so many people never sell. They're like, where, what was your profit taking area? What was your reward that you got to pay yourself in that nature? Now, of course, there's obviously people that do pay themselves, but it's so important to understand where it went. How high did it go? I did a survey not that long ago on my Twitter, and amongst the followers that said that they were in plays like this or situations like this, and then they ended up selling the play for a loss. Okay. They were up thousands of percent, and months later, whatever, they kept holding on, hoping for more. Okay. Greed is a powerful thing. It's crazy how much more you think you can get out of a situation, when you got to realize markets aren't there to just think about you. Markets don't care about you. Markets aren't there to try to make you the most amount of bang for your buck. You have to trade that thing with a constant trade plan, risk management, and so on. But one must learn how to trade consistently and wisely. Okay. Professional traders have always grasped by that idea and are always looking for the next good trade with a considerable good risk reward ratio. They would rather be consistent as opposed to wildly swinging for the fences. This, I'm gonna buy this, I'm gonna buy that, and you're constantly losing, or waiting so long for situations to finally take hold based on what somebody said on a Twitter chat room, or Discord room, or whatever it may be, that you're based off of someone else's opinion. I mean, they're not managing your money. You guys are in control of your money. You guys are in control of pulling that trigger of when to buy, when to sell, when to hit your risk management, and so on. Nothing should be based on somebody else's opinion. Okay. You guys got to work for yourself. You guys got to start understanding, learning for yourself, think on your feet. This can really change your life. I mean, there is no better place, in my opinion, to make a very valuable income that is really well than trading the stock market. Okay. But it has a ton of risk. No one is going to, understand this stuff without learning the process. Okay. I mean, think about it this way. If you have a lifelong career, you're going to generally go to a college or an institution to learn how to master that career, get a degree for it, how to really understand what you're doing, and then go to the field and actually work it. You're not just going to, show up one day, hey, hire me. I'm sure I can handle this job, only to have no clue what you're doing. And you need help to understand how to do such and such. Okay. We're not born with understanding of things that work to this nature. We have to have some kind of understanding of what we're doing. So I can't stress it enough. I'm always there to try to help teach my students. I'm always there to try to master them, mentor them in such a way that they can, of course, make money just like me and anybody else out there, to understand exactly what I'm looking at, exactly what I'm seeing, and exactly how I'm understanding these markets, trading them, being consistent with it. Okay. I don't want to wildly swing for the fences and get lucky one day and all of a sudden turn my, 5 grand into 20 grand, and then the next day lose it all because I got ambitious or confident, thinking that I knew exactly what I was doing. And in turn, I ended up being lucky instead of understanding of what I'm doing, you know. So you might think you need to win as many trades as possible in order to make a profit, but actually that's not true. Being profitable is based on several different factors, and success rate is only one. Okay. So I'm going to break down some of the situation here, some of these emotions and things of that nature we all carry with us during this process. But the cycle of the market, okay, let's just say this line right here is a stock chart rolling up and down. You get optimism about a stock. Okay. You get impatient. You may have, bought the stock here at optimism. You may have bought it at impatient. You may have bought it here at excitement, or even overconfidence. Maybe you jumped into the market at the top thinking, man, you were so confident you made good money on the last money. Why not jump into this situation and play it? Then all of a sudden it starts dropping. You may hold denial. It's kind of funny. Well, I shouldn't say it's funny, but it's so common to see people buy plays at the top and then hold the play, hold their losers just with an iron fist. They just can't stand to let go of a loser. And they'll hang on to it till death do them part, to the most part. Okay. So with this is the roller coaster of emotions within a chart. Okay. We got denial as it starts falling. We got regret. We have fear. Sometimes we'll have panic. And then we have despair at the bottom of the market. Okay. And in this sense of the overconfidence sector, we've got successful traders recognize this as the point of maximum financial risk. Okay. This is literally at the top of risk sector. Okay. That's why I want to really touch on risk versus reward. Okay. I want to have the lowest amount of risk versus my highest amount of reward. Why would I want to, let the entire reward pass me by only to buy when my risk is so much greater than my reward? Okay. That doesn't make sense. You can go to a gambling casino and your odds are practically 50-50 or 49-51. And that's a 1-to-1 risk reward ratio. Okay. I want to have risk be far less than my reward. Okay. I want to, risk a certain amount of money with, 2 or 3 or 4 or 5 times my risk in possible returns for that situation. So as the start comes backing up, you have hope, you have relief, you have optimism, you're back at that exact same optimism. And of course, if impatience, excitement, and overconfidence comes back up again, then of course you may be dropping down again and doing the exact same cycle again. It's not uncommon for somebody to buy at overconfidence and then watch them go through this entire phase and then come right around and hang on to it again and not sell it for either break even or a little bit of a loss, and then watch it all go back down again, and they're back in the exact same cycle once again. Okay. Stocks take their curves. Just because we jumped into it doesn't mean it's a good trade. You've got to learn to cut your stops. You got to learn to get out of your play. You got to understand why you're entering the play. Look for that trade plan, have that execution of your risk versus reward. And, in order to stop out of the play, it's not about being right. Okay. We're not about being right on a stock. It's all about making money. Okay. There's no reason to jump in this situation and say that you're right, and oh man, yeah, it's dropping, and you start reading all these message boards, you start reading the chat rooms to try to help boost your confidence level because you're so beat down here at the bottom, and you're still holding this bag of doo-doo, and you're red, and you're emotional at that situation, and it's like, you got to have some confidence. You want the people that pander to the situation, to that, makes you feel good about something is bad. Okay. If you have to ask the question and you're in a play, is this thing going to bounce? Do I know what I'm doing? Am I, should I keep holding this play? Is it too late to get out? Things of that nature. Then it's probably time to jump out, reassess your situation, understand why you got in the play. A common question too is when a stock is running up like this, and someone at the overconfidence area right here ask me a question, say, "Hey, Mike, is it too late to jump in the play?" And I'm like, "Yeah, it's definitely too late to jump in the play. If I'm ready to start selling, it's too late to jump in the play, guys." Sometimes people will play puts on my calls, and of course can make money that way when I'm ready, when the stock market's ready to reverse. But with that being said, it's very risky to be the person that wants to buy when I'm ready to sell. Okay, there's a reason why I'm selling. There's a reason why that I'm taking my money. It's near resistance levels. Markets looking weak. I understand the level 2 process, the way buyers and sellers enter these markets. And of course, it takes time. It takes understanding of it. Of course, I teach it all for you guys, but it does take a process to learn all this stuff. So trading emotions is a powerful thing as well. Let's say this is the mental states to discard. You got to get rid of these emotions. Okay, it's nothing but a lot of stress level in your system, and you've got to have yourself some good, I should say, focused, mental states to seek out over here on the right. So mental states to discard. You have overconfidence. It's a bad thing. Greed is bad. Invincibility, anger, revenge, anxiety, stress, denial, irritation, dissatisfaction, paranoia, fear, panic, hurried, distracted, exhausted, depressed. These are bad trading emotions that so many people come to the markets with. If you've got any of this stuff, guys, it's going to really kill your potential as a trader. Okay. And of course, it's hard to overcome, but you can overcome it. Okay. Anybody can overcome this stuff. It's a matter of how we understand our trading situations to do so. We have to take it with a grain of salt. We can't just, be overconfident. We can't get greedy in the middle of a trade. We can't think we're invincible. Let's say we get angry because the stock is dropping or we lost money on the previous one. So we're going to approach the next trade with anger. And of course, that's going to give us revenge trading in that situation. And then we start losing it on it. And then we're going to have anxiety. We're going to have stress again. We're going to have denial, irritation, dissatisfaction, paranoia, fear, panic. You're jumping out of the play with, not knowing what you're doing. You get hurried. You want to jump into the stuff. You get rushed, distracted. And then you get exhausted, and then you get depressed. Okay, it's a massive cycle that so many people just cannot overcome, and it can be done, guys. It's a working process to really overcome these crazy emotions that will really destroy your trading career. I mean, it literally will destroy your trading career if you can't overcome these emotions. And with that being said, it's it's a rough situation to be in, but we've all been there, guys. We've all tried to overcome greed. We try to overcome the overconfidence, anger issues, revenge, anxiety, stress, denial, all that stuff. We have to overcome it in order to master what we're trying to focus on. And of course, there's money involved. Okay. It's your money. You're trying to make money with your money. I understand that situation. You may have, bills coming up, or credit cards due, or rent is coming due, or you got car payments. We're dealing with a market or with a situation right now that so many people are out of jobs. So they're looking at the market as a way of helping them out or turn their money into more money. Okay. So you're going to overload yourself with some of these, mental emotions that will literally distract you from focusing on if it's a good trade or a bad trade. Hell, even looking at your P&L off to your left side on your platform, and you see your profit and loss and your account going up $1,000 or $2,000 or a couple $100 or whatever it may be, and you want to see, let's just say you're at 9,000, $920 or something like that, and you're trying to make your account up to 10 grand even, and you're going to hold this play until it gives you 10 grand, and it may go up to 20, $9,980 or something like that, and maybe shoot short of it, and then it starts falling back down and you end up losing. And it's like, why weren't you watching the trade? Quit watching this P&L. Okay. I can't stress enough. That right there will flare up emotions as well. When you're so constant and so focused on jumping into a trade only to make your P&L, your account value up to a certain point. Okay. That right there, the trade doesn't care about your P&L. The trade doesn't care about your portfolio value. This right here, guys, your portfolio value is not your self-worth. It's not what you got to focus on. You got to focus on the trade at hand. How much risk versus reward will this particular setup give me? You've got to close that out. Okay. You've literally got to just block that out of your entire account. Don't even look at it. Look at the trade. Understand the risk versus reward. What does the setup look like for me? Does it look like it's going to be potential good, potential bad? What's the risk? Am I entering too late? Am I entering too early? Stock trading is all about that timing. Okay. Sometimes we're too early and we may have to sit out the play a little bit before it's ready to take off. Okay. And then we can jump back in it. There's many times where I've gotten into situations that could be too early, and I had to kill the play for a small loss or break even or whatever it may be, and be like, I'll come back around in about 30 minutes and see how the stock is looking. Keep an eye on it. And sure enough, if it's ready to break out, then I'll jump back in it. Okay. It had nothing to do with my previous loss or break even trade for me to mentally not understand why the chart wasn't ready to jump at that time. There wasn't enough volume at noon. There wasn't enough volume or buyers to take the stock out of that breakout point I was wanting it to do so. So I'll have to wait until there is, or if it decides to do it at all. Okay. So we'll reevaluate that trade later. I keep a lot of monitors up here, guys. I'm always watching about 50 or 60 charts at one time. So I'm constantly looking for those opportunities. There's tons of them out there every single day. But another thing, as far as good emotions that are good, you got to have some kind of confidence level. Okay. You can't be, unconfident. You can't be confident at all coming to the markets. You have to understand, confidence obviously is built through success and understanding of what's happening, but you have to be confident, can't be hesitant when taking a trade. You want to be confident that you're making a good trade. Self-aware is a big thing too. If you get in a losing streak, you're going to be destroying your self-awareness. So be very self-aware as far as, okay, this is my trading plan. The candles are moving up big right now. They're dropping big. They're doing this or that. Self-awareness is huge. You've got to have good self-awareness. And there's a student actually in my class that throws out an alarm clock every 30 minutes to give him self-awareness. I mean, this is not something that people really talk about or even know much about. And they're like, yeah, I trade stocks. Yeah, I bought this. Man, I lost my ass. I was doing this or that. Self-awareness, guys. Okay. If you got to put an alarm clock on your phone just to alert you when to be self-aware, that's not a bad thing to do, because it literally, it's telling yourself, does the chart still look good? Is there a reason why you're still holding it? Is everything about the trade still in play? And it's going to be self-aware to give you that advice to, should you stay in the play? Should you continue? Are you still following your rules? Are you still following your plan? Preparedness. Excuse me. Preparedness is another substantial thing, guys. Okay. You can't be over prepared. You can't be under prepared, but being prepared is a very positive feat in understanding, trades. You got to be able to be prepared to understand what this chart could possibly do. Being unprepared is obviously a bad thing. So with that being said, I want to say that, you gotta be prepared, guys. Big important factor. Positive. Okay. You gotta have some kind of positivity. Obviously it's going to be play with confidence. You got to be rested for trading, relaxed. A good way to approach this is obviously from people who, think of this as a less rushed or hurried or distracted situation. You got to have some kind of focus or understanding of why you're jumping into this play in the beginning. So be relaxed, gives you the best emotional situation, in my opinion. Energized about good things, stimulated, focused, organized, grateful, humble. Markets will humble you guys if you throw an overconfidence and greed in there. We got to stay humble. be informed of your plays, and keep a good structure. Okay, structures is everything as well. So we'll go back and break this down a little bit. Okay, so entry points obviously is going to help build that confidence as far as you picking these entry points correctly. That was going to give you the best reward for your risk. An entry point, that price at which a trader initiates the position by buying that asset. People assume that there always has to be a profitable entry point, but that's not true. Okay, there's many entry points on a chart. Sometimes that graph just doesn't project any good trades for the near future due to its low volatility, maybe in both directions. You must be patient, wait for the right time to take a position in a certain market. Got to keep a good stop loss. Okay, a stop loss is the practice at which you recognize that trade is not going to well for you and you get out of that trade to cut your losses. The difference in price between your entry point and your stop loss is the maximum amount of money you could lose on that trade. And don't, guys, don't waver this section right here at all. Okay, so many people want to adjust their stop loss, keep adjusting it and lose a little more and lose a little more. Oh, I'm used to this kind of hurt. I'll let it hurt me a little bit more and a little bit more. Before long, you're blowing up accounts on a very consistent basis. No one wants to blow up accounts on a consistent basis. Therefore, these stop losses associated with the risk of the trade. Okay, this is the most important factor. Risk equal entry point versus the stop loss. Okay, that is your risk. It's that certain section of it. And I'll break it down here on a chart here in a minute so you guys understand that risk a little bit easier. You must focus on the risk before the reward. Okay, this is the most important factor. Don't look to all the big green numbers or the big green potential reward and all this stuff. You have to understand the amount of risk you have to put on the table. Now, there obviously is no such thing as zero risk trading. Okay, so don't come to the stock market thinking, oh man, I'm going to make every single trade green and I'm not going to risk anything. You're going to come in situations where you're going to have some red trades. Okay. Not necessarily red on the day, but there's trades I'll have that are red or, that just went against my stop loss versus my speculated move. But that all comes down to being disciplined, patient, understanding of why this trade is such and such and why you need to take this trade here and so on. Now, by choosing that stop loss first, if you choose at the wrong price, you could find yourself losing a lot of money fast. When looking at the graph, you want to see where the highs and lows of price fluctuations are. For example, day traders use a graph showing the price fluctuations over the past 2 days. Okay, so that historical data on your chart is very important. For stop loss, when we are focused on the low points, ideally you identify a trend in the low points and make an estimated based on that. Profit target. Okay, this is what will help you guys from being too greedy, is having a profit target. Okay, a profit target essentially is the opposite of the stop loss. It's the point where the trade will close when your trade idea was right. Okay, we're right about this situation, we played to that profit target, and that's where we get out. One reason a profit target is used is to remove the emotion out of trading. It allows you to place that trade, allow it to play out, as opposed to you making rash emotional decisions. Without a profit target, trades sometimes get carried away by market hype. Okay, they don't cash in and recognize their profit because they think they can make a larger profit by just waiting. This makes them much more likely to still be holding on to an asset even when the price starts to fail. Okay, just like I talked about in the beginning of the other lesson, some people get into these home run play situations, so to speak, and just hang on and hang on and hang on and hang on. And when the price starts falling, they're going to live with the same little emotion situation here of regret, fear, panic, despair. And then when it tries to come back up, hope, relief, and optimism, but there's no sense in it, coming back up where you'd like for it to exit. Okay, you got to follow those strict guidelines. How much easier would it be to just jump out when you decide you're starting to think overconfidence? Am I getting overconfidence? Am I getting excited about the trade? It's probably time to jump out of the situation and then wait for it to come back down in order to reassess a new entry and play the scalp again without losing money on the way down. Profit target indicates the maximum amount of profit you can make from a trade. Therefore, in the same way that the stop loss relates to the risk of trade, the profit target relates to the reward of that trade. Okay, potential reward equals your target profit of your entry point. Okay, now here's an example I threw up on a chart for you guys to understand a little bit easier. But with this being said, this is NIO right here. This was actually an alert I called out in the chat room the other day. This was back in November 17th is when that day was, all the way to November 18th. So this is one day. Okay, this is entire 1 day's worth of action on a 2-minute candle, which is pretty pretty common of what I trade with on a, to trade the noise move. But this was a symmetrical triangle. Okay. I teach this pattern. I teach all these different patterns, but this is a common pattern that the chat room likes to use sometimes. But you're looking for those higher lows and lower highs. Okay. And it comes into this wedge formation. And that right there is where entry is, when we finally get a breakout point. Okay. That's why I said it's all about timing. You could enter right here and it gets to here, and all of a sudden you sell right here for break even, only for it to reverse, and not understanding what you're charting at all. Okay. Understanding of why you're playing this position at all, understanding the pattern that begins to form. But your entry is literally on the break of that symmetrical triangle breakout of that upper trend line. And of course, the risk that is involved right here is obviously if it jumps out of the pattern and then tries to come back into the pattern and then goes into the pattern and maybe break below the pattern, that is your risk. Okay. So your risk is so far minimal. Okay. And the measured move on this as well, obviously, is from the biggest point of the triangle, which is $2.09. You would measure from that point of breakout for $2.09. That gives you a $48.68 target. That's a pretty good move, $2.09 move versus a couple cent loss there, 46.57 to 46.33. Yeah, it's like 20-cent loss right there. Nothing serious at all. Okay. So that would be a risk. If it was to break out, you enter there. If it comes back into the pattern and test your bottom trend line, then you know to cut the play. Okay. The play just didn't have enough volume to push out of the pattern appropriately. But with this being said, what did it do? We played this perfectly, guys. It was a beautiful play. Those options turned in well over 100%. And that was, good money. You throw in $1,000, you walk away with $2,000. I mean, who doesn't like that, right? Obviously, we went a little bit further. Okay, this was a daily resistance line too. If I was to go back on the chart, but we hit a little bit further at this area. But the profit target was that 48.68. And what did we do when we get up here? We start taking our money. We start taking profits. Okay, and of course, if it gets up a little bit higher, that's even better. But you got to learn to take the profit when you've hit your point. Because look what happened a little bit later. This is where greed sets in. You're like, oh, I'll go past it. Greed can set in, and look, you can lose the entire move in a matter of minutes. Okay. This is a 2-minute candle. Okay. What do we got there? 2, 4, 6, 8, 10, 12, 14. In 14 minutes, you'd lose that entire amount of money all the way back down to entry. And that option would be crushed. Okay. We actually played puts on the downside of this and made even more money by grabbing puts right around here where it broke our profit target area and continued falling. And the puts paid another 100% or so down here on the bottom. I mean, you made 100% going up and 100% going down. It was awesome. But it all comes down to understanding that chart and the pattern. I mean, you've got to jump in the play, stay disciplined to your profit targets, and then jump out and so on. Understanding your risk that you're jumping into the play versus the potential reward. Okay. You don't want to be jumping in right here and be like, hey, Mike, I see you alerted that play earlier and it's running up here. Do you think I should go ahead and enter? And at that point, it's right here. And I'm like, no, I wouldn't recommend it because you've literally got all this risk versus this tiny little bit of reward. Okay. That's a risk reward ratio of like 1 to 2. Okay. You have 2 risk versus 1 reward. Who wants to play that? Okay. That's literally risking, $2 to make $1. Okay. Who wants to do that? Okay. I'd rather risk $1 to make $4. That sounds a whole lot more appetizing. And why jump in the middle of the trade right there after it's too late of entry, only to get crushed when it goes up? You're like, oh, okay, well, I'm up $1 here. They're taking profits here, but I think we'll go further. And of course, you go a little bit further and you're like, yeah, I've got this. I know what I'm doing, only to get crushed in a matter of 14 minutes afterwards. You're like, man, I got crushed. That trade just didn't work in my favor. I entered too late and I ended up losing all my gains and then some. Okay. And in that situation, you could literally turn an entirely perfect alert into a devastation of funds right there. Okay. Devastation of a trade due to the fact of your own greed, your own late to the entry. You're not your discipline. You had no trading rules. You had a gambling syndrome that was going on there. You jumped into the middle of it only to get destroyed a little bit later due to the greed factor up here. Okay. When you jump in late to a play, you got to realize you're taking away a little bit more of reward. Okay. You'd end up playing Okay, let me throw this a different color here real quick and give it a little easier example. You would throw this amount of risk, okay? You'd be adding all this risk right here versus that potential reward, okay? No one likes that. That doesn't sound appeasing when you've got this little bit of risk versus that insane amount of risk versus that insane amount of reward by entering right here, okay, only to get crushed a little bit later due to greed, that emotion that we fight so much going up on the up and up. Okay, the higher up a stock goes, the more antsy or impatient I get about going ahead and taking my profits. Okay, because I see so many times plays will start dumping down like this. You got to realize market participants coming to the market are going to start to sell. They're going to start taking profits. Short sellers are going to come to the market and see this as a big opportunity to take advantage of a high that is, run, and they're going to want to take the short position and try to push this back down. So very important factor, guys, to avoid a situation like that altogether. So going back to what I was talking about here, let me see if I can pull it up. Where is it? There we go. So very important factor of understanding that risk versus reward. So if you use all 3 points from above, you'll be able to understand your risk reward before placing the trade. This is essential because if you trade in the spur of the moment without a plan, okay, just jumping into the middle of that situation right there, you won't be successful long term. People usually compare risk and reward by using a risk reward ratio. Risk reward ratio, potential reward, and your risk. Target profit, entry point to stop loss. Okay. That's the important factors of that risk reward. Now, the question is, what would be considered a good risk reward ratio for a trade to be worth making? Okay. Generally, traders believe anything above 1-to-1 is a good trade idea. For example, if your potential reward is $5, but your risk is $10, you don't have a good potential trade at all. Your risk reward ratio is 5 to 10 or 0.5 to 1. If the roles were reversed and your risk was $5 for the possibility of making $10, that's a much better trade. Your risk reward ratio is now 2 to 1. Okay. Many traders don't follow these plans due to emotion that they're bringing to the market. When the trade starts going downward, people will move their stop loss or lower in hope of their trade will bounce back. Traders need to know that it takes time to estimate trades before initiating them. One needs to be patient and follow their plan. A trader shouldn't lower a stop loss after it's been set. So very important, guys. Okay. Now this right here was an ascending triangle pattern, actually. This one right here, I'll pull it up. This one right here is another pattern where the top is flat. Okay, you hit some resistance. You broke the entry right there. Your risk is obviously breaking back into the pattern. In this case, it did test the pattern here, but it did not break into the pattern. Okay, so your entry is obviously there. Your potential reward is going to be $1.70. We had $1.71 right here. That was an easy profit target area. We dropped down from that point where we were selling, and it actually pushed up just briefly above it before crashing all the way back down to below your entry. Okay, that's why I say it's so important to have that profit target area of a measured move in a situation like this. So important. Obviously, it came all the way down and bounced back up, and of course, that would have gave somebody who entered right here a last minute ray of hope only to get defeated back again. Okay. So there's not money to be made in that. Okay. We got to have some consistent basis to understand why we're jumping into that play in the beginning. And of course, here's back to that symmetrical triangle that I was just talking about. So understand the patterns, understand your profit, your risk, and assessing them, appropriately. So how much does winning really matter to you guys? Okay. This will finish up the lesson, but when they start losing money on a trade, many traders just wait for the market to bounce back for the entry point. That may work sometimes, but when it doesn't work, you can lose a lot of money. A person might be trading and making a profit of 9 out of 10 times, but that one time their commodity doesn't recover can result in a big loss. On the other hand, someone who only wins 7 out of 10 times trades can make money. How? Their losses are all smaller. Okay. They find the right time to enter a trade, then they set up losses wisely and stick to them. The other traders who are successful 9 out of 10 times is still losing money because that one loss is so big. Okay. They just hang on to their losers way too long. Most traders who lose money and quit trading don't lose it slowly. They have a few huge losses that wipe out their entire account, leaving them with no option but to leave the market. Okay. It's crucial to take your time when taking positions and putting down capital. It's not worth taking the easy way out, waiting for certain markets to go up. This might work in the short term, but in the long term, it will never work, guys. Okay. You will find yourself running out of cash fairly quickly. Winning a high proportion of your trades is a good goal, but consistently taking positions with a smart stop loss, profit target, and entry point will make more money in the long run. So very important, guys, to understand your risk versus reward. Okay. I can't stress that enough. I'll just cover a few charts here real quick. I know we covered NIO here a little bit early, but let's just say this is a brand new naked chart. Okay. I want to understand my highs and lows of resistance levels for the day. And this is kind of how I approach any chart. I'm gonna go ahead and clean up NIO here and take all my markings off of it. This is using TrendSpider, which actually they've got a 50% sell off all the way to the end of this month. I'll go ahead and post a link in the description down below, guys. So be sure to check that out. They got a free 7-day trial you guys can sign up to as well. But I'm going to hit the log button here. Okay. It's going to flatten out my chart a little bit here. I'm going to understand, how to play my lines. I'm going to go ahead and hit the trend line up here. I'm going to look for these lows. Okay. I want to base a low off of this area right here. I want to hit that. I want to hit this little candle right there, and I've got a low. Okay. So I've got a trend that the stock is following. Maybe I want more trends. So I'm going to hit another low point right here. Yeah, it looks like we followed that trend several times due to the fact we got lows hitting this one, and then we got these lows following that one right there. And it's based off of the high of that candle and the low of that candle. Okay. So it makes it easy for me to have that on there. I'm going to go ahead and pop one off the high right here that we had the other day. And I'm going to see if it hits any other highs through here. Yep, looks pretty good right there. We got some high. We got a high there. We got a high there, highs there. A little bit of some there and through there as well. So it's a followed line and spaced about evenly as well. So with that being said, I may throw up one more right here. Let's see if I've got any points of contact. Yeah, that line could pertain pretty strongly. Okay. So with that being said, I'm going to hit the log again. It's going to curve my lines up. It gives me a little bit more of a clarity of what the candles are doing here. Zoomed out, zoomed in, so on. This is a daily time frame, by the way. Now I want to adjust some resistance and support levels on the highs and lows of each day so it pertains back to my 2-minute chart. Okay. So I'm going to hit this horizontal line right here. I'm going to base it off the top of this candle right there. I've got 54. And what I got there, roughly 54.10. Okay. Now I'm adjust to the opening of that candle. Okay. The red candles, they open at the top and close at the bottom. Green candles, they open at the bottom and close at the top. Okay. That's what makes them green. So I'm going to go zoom down here, and that's the opening of that candle, 51.36. Okay. So this candle right here, which is our Friday high, I'm going to go ahead and adjust this out right there. 50.61 was our Friday's high. Okay. So that was a resistance we did not break. So it's going to pertain to me for next week. We closed at 49.25. It looks like the high of these two candles and the close of that Friday candle. So I'm going to go ahead and throw that up there too, because that line will pertain to us as well. So 49.37 will be that number. I'll go on down here. We've got a close of that day, and open of Friday, that 48.28, roughly 48.29 is a pertaining price target I should look and focus on as well. So going on down the list here, I want to go ahead and knock one right there. That was a support zone or an opening price of that candle on November 17th. That was actually a low on Friday. I may go ahead and throw it up there just beyond that one. And I'm going to go ahead and hit the high of November 18th candle. And also it's very near to the close on November 17th candle. We go on down a little bit lower here, get yourself an even lower one. Okay, 45.75 could pertain to us due to the opening price on November 18th candle and a closing price on November 16th candle. I could even throw up some more, maybe one right there. Yeah, that was the low of November 19th candle, and also the closing price of November 13 and the opening price of November 12 and the opening price of November 10th. So that 44.70 will pertain pretty strongly to me, in my opinion. So with that being said, it gives a good analysis of what exactly is going on. Obviously, I could chart all the way down here, but those price targets are not pertinent. Obviously, if our stock starts falling, then I'm going to evaluate these candles in the past as historical data to understand that area could be pretty serious that I need to pay attention to. So now that I've got that marked on a daily time frame, I'm gonna go ahead and knock this back down to a 2-minute and see what those lines look like. Okay. So this is obviously our daily chart. You guys see these lines right here now, these silver lines. And as I see right here, that of course was our opening price of Thursday's candle. We had some resistance there, and obviously some resistance here. Okay. And of course, all these candles have noise. This was our opening on Friday. We pushed up here. We hit that high. We traded a little bit sideways right here, and of course, dropped back down here. There wasn't many trade opportunities on Friday for NIO, but I do like lower highs and higher lows in order to pertain something. So with that being said, you could almost throw up a trend line from right here all the way up through here, due to the fact of a 2-minute chart, and pretty quickly understand that our uphill trend has completely changed once it's cracked below here. Okay. Now, obviously, based off of here in this area of support, and of course, that could have been a potential dip buy if you wanted to. But as I said, there wasn't really much of a trade on Friday due to the very short candle that we saw on the daily there. Obviously Thursday had more of a candle, but Friday was not much of a candle to trade NIO. But I could go back to, let's see here, back to Friday's move. And there's actually some trades right here. Okay. Obviously breaking the high on Wednesday would have been an entry. Okay. My risk would have been like, okay, the reasoning I'm entering this trade is to break this high. Okay. We hit that high twice, and then pulled back down and then tried to re-break it. On the break of that high is an entry for me almost every time. Now, of course, I know I have a resistance up here and a resistance up here off the daily chart that we just drew. Okay, there's nothing on the 2-minute. These are lines based off of that daily time frame. So when I jump on the entry of, what is that, 46.80, I've got 47.80. So a dollar move, I could probably make decent on some options. I've got 48.27 up there. So I'm gonna go ahead and show you guys that back on the daily chart. That's an entry right there. Okay. It's a small play, but it's still a play. Not necessarily a pattern play, just a break of previous highs play. Okay. I like to play puts on previous lows and break of previous highs as well. So highs right here, people are like, man, that's the high. Why would you want to play the high? There's a lot of good money to play the high. Trust me, they've got to make new highs. So with that being said, break that high. That price right there on the daily chart is 46.78. That would have been the entry. Let's go back to the daily chart and see what that looks like. 46.78. Look at that. Okay. That's that area right there. 46.78. That would have entered that chart right there. And of course, that daily candle on Thursday shot all the way up here to 48.26. $2.50 or so move right there. Okay. Still money to be made through all that noise. Okay. And the reason for that play was, actually, I could drop that down to 46.28 or 78 due to the high of that, or 68, due to the high of Wednesday's candle right there. And the, excuse me, the close of Tuesday's candle right there. So it's still a play and play, but that's how you're going to have to chart down this chart in order to roadmap yourself to a noisier chart, like a 2-minute. If you guys are scared of 2-minute candles, maybe they move too fast for you, back things back down to a 5-minute candle. Okay. You can analyze things a little bit on a safer bet, but right here is another easy, that's that same play right there, breaking that double top and then shooting back up here to these areas. But even on a double bottom, okay, you've got a double bottom right there. Even if you were the guy that bought the dip off of a double bottom, you know that as a support line, that even stands an even much greater chance of playing. I could go on and on about this stuff. And obviously we can go back to this pattern right here. Right here is that symmetrical pattern. I could draw that out for you right there. Right through there. And obviously you've got your entry. Let's go ahead and measure the move from the symmetrical pattern all the way up to right there. You got $2.08. Okay. So breakout point obviously is going to be break of that upper trend line. I can measure this up to $2.08 right there. So you're literally jumping into an entry right here. That's why I love pattern plays. They're the most low risk situations. Obviously, if it, broke above the pattern here and failed the pattern, my risk would be breaking that bottom trend line. Okay. So not much risk, but much greater reward due to that $2.08 of that entire pattern. Breaks out of the pattern. What do you know? We get to our $2.08 move right there, made great money. And if we got greedy, we could hit the high up there. But of course, as you guys saw, it fell down pretty quickly. This is on a 5-minute time frame. Still, you can do that. It's slower pace. Obviously, with 5-minute candles, as it takes more move to make the candles. But it's a little slower pace. Obviously, it's not going to flare up your emotions on a 2-minute candle and so on. But anyway, guys, I just want to throw this lesson out for you guys. I hope it's helpful. If it is helpful, please leave a comment or subscribe to the channel. I'm obviously going to be posting maybe one of these a week, maybe. So I hope it's helpful for you guys. Right now, we do got a 40% off sale on our classes coming up. So if you guys want to sign up for our next 3-month session, it's coming up here pretty quickly. We're going to be playing this through January through April. And all the classes, guys, every student that signs up, I actually give them an entire year to our live trading room. So that gives them access to the next following classes, which will be after April. And I do 3-month classes every year. So you actually, if you sign up for the full 3-month class, actually give them access to the following 3-month classes after that as well for free. Doesn't cost you anything. So like I said, my main focus on this is to help students be able to understand these markets, understand these trading habits, understanding trade planning rules and stick to them. And we got a whole room of helpful admins that really help, progress each other through each process, as we all have different learning curves. All these classes are recorded, but I have it all detailed down here on the class depth here. But I'll go ahead and post this link in the description down below if you guys are interested. Love new students coming to the market. Love teaching them consistency and understanding. And anyway, guys, if you got any questions, you can follow me on Twitter as well. Hit me up with any questions, and I'm always here to help. Hope you guys have a great week, and looking forward to this week with the EV plays.